Hey everyone, and welcome back to another video. We're talking investing in dividend stocks today. Now, if you like what you see, please hit subscribe, drop me a comment if you have any questions whatsoever. I answer absolutely all of them. Now, dividend is a great tool for our stock investors, and it's a cash payout some companies decide to pay to their investors. It's usually paid monthly, quarterly, semi-annually, or annually, but most of the time it's paid quarterly, so 4 times a year. And it can be a great way to reduce your risk and to increase the consistency of your portfolio. And dividend has actually been shown to, over long periods of time, actually outweigh price appreciation, which means investors have actually made more money from the dividend alone than the actual stock price going up. Because when you have these huge bubbles and they burst, stock prices fall, but the dividend it keeps being paid out. And dividend also usually goes up when the prices go down, because a dividend is paid in a dollar amount per share. So if a company is trading at $100 per share and they pay a $1 dividend, that's a 1% dividend. But if the stock crashes to 50%, the company theoretically will still pay $1, making it a 2% yield. That is why the yield percentage of a stock usually goes up when the price goes down. So it keeps leveling out your portfolio, and you can make money even when the market is going down. And over the last 30 years, so since 1990, the total return of the S&P 500 has been around 724%. That's annualized just about 7.3%, which is decent, right? Right where you want your return to be. But the total return of the reinvested dividend has been 1,420, annualizing out at 9.5%. So you've actually made more money from dividend than price appreciation. But do keep this in mind. If you can find those quality companies that becomes really, really big, they will massively outperform any dividend any company will pay out. So do take this with a grain of salt. So for my list, the stocks have to pay 2% or more in dividend yield, so percentage of your total holding. And the average of the S&P 500 over the last couple of years have been 1.9. It's a lot higher in 2020 because of the downturn. But a lot of companies will have to cut their dividends, so don't be fooled by the high yields right now. They have to show a stable dividend history, so they will have to have increased their dividend and paid it for many, many years. They need a strong balance sheet and cash flow in order to be able to keep paying the dividend, and it has to be a great company. I will take different companies from different industries, so it's not all utilities or all banks. It's going to be a little bit of everything, so you can make your own little dividend portfolio with them. Now, one thing to keep in mind, as always, but when I make these lists, I am not recommending these stocks personally. Do not take this as investing advice. It's just my personal opinion, and I am personally invested in waste management, Nextera Energy. I'm going to start off with waste management, which is the largest waste management player in the US. It has a great CEO, it has a steady dividend history, and the safe nature of the company and its income just makes it an overall great pick. Now, the company pays $2.18 a share, so this is the actual dollar amount per share. They pay 2.18% yield because the stock is at exactly $100, so this is just a coincidence. The company has increased the dividend payout for 16 years consecutively. They have a 54.9% payout ratio, which means how much of their income they pay out to their dividend. You ideally want this number to be low, but even if it's a high number, it means that the company is truly prioritizing paying you a dividend, so it's not always a bad thing. And the reinvested dividend from waste management would turn $1,000 into $1,435 after 10 years. So that is the dividend alone. That is taken into account a 8% increase in dividend payout every year, which is pretty standard. So this is the dividend alone. And moving on to the world's largest aerospace and defense company, Lockheed Martin. They are known for making the greatest advanced weapon systems in the world, amongst them the F-35 and the F-22, the greatest fighters out there today. And their unrivaled ties with the Pentagon and the integral part they play in the military-industrial complex in the US makes this a bulletproof stocks, pun intended. Now they pay $9.60 per share, which comes out to a 2.6% yield exactly. They have a 39.76% payout ratio. They've increased the dividend for 17 years consecutively. And if you invested $1,000 today in Lockheed Martin and just kept investing the dividend alone, it would turn $1,000 into $1,538. Pretty impressive. Now moving on to the world's largest renewable energy company, Nextera Energy. They are at the forefront of innovation when it comes to renewable energy, and they produce wind energy, solar, hydro, nuclear, biomass, and then a wind, and then a tiny little bit of oil left on their balance sheet. So they do it all. Truly a great company where you can get growth, innovation, and utility at the same time. The company pays $5.60 per share, which comes out to just about 2.4% yield. They have a 51.66% payout ratio, and they've grown their dividend for 10 years. And if you invest $1,000, the dividend reinvested alone would come out to $1,488 after 10 years. Next up is one of the oldest and biggest banks in the world, JPMorgan. This bank has its arms all over the world, and they do everything a bank can do, and they do it all over the world. So this is a great diversified play, one of the kings of dividends for sure, and banks are usually quite safe plays. You know, they are susceptible to economic downturn, but they still do well in those sorts of environments if it's a good bank. The company pays $3.60 per share, which comes out to a 3.5% yield. They only have a 39.27% payout ratio. They've increased their dividend for 9 years. That's mostly because they had a break during the financial crisis. And $1,000 dividends alone would turn into $1,783 after 10 years. And moving on to the king of dividend stocks, it is Johnson&Johnson. Truly the king of dividend. They've increased their dividend for 57 years in a row. Now, this is the world's largest healthcare and pharmaceutical company. They sell everything within personal healthcare you can imagine. They sell all sorts of drugs, pharmaceutical supplies, everyday items like soap, baby wipes, mouthwash, and every type of cream under the sun. So this is a well-diversified company with one of the greatest balance sheets in the world and a great dividend at that. So the company pays $3.80 per share, which comes out to 2.69% yield, which is great. They have a 44.09% payout ratio. They've increased their dividend for 57 years consecutively, and $1,000 would turn into $1,563. That's the dividend alone. Now, last up, I'm going to take a chance at Boeing. The stock has crashed and the company's struggling, but I think they can turn it around. They still make the best commercial jets in the world. They make great fighter planes and great space parts as well as satellites. The company has cash on the balance sheet, and they have access to more debts, and they will probably get some help from the government. And as long as they can get through this, they can get their dividend back and start paying it, because they have totally freezed their dividend for the rest of the year. So right now, Boeing is not paying a dividend, but it will resume, and the company usually pays between 2 and 2.5%, which is decent. So I think once the company can get back and start paying a dividend and slowly build it up, I think it can be a great stock, and you will probably get some of the recovery in the stock as well. So those are my picks. Let me know which ones are your favorite when it comes to dividend. Of these, I own Waste Management and Nextera Energy, and I've been invested in both Lockheed Martin, Johnson&Johnson and Boeing. So I've been in all of these stocks, JPMorgan as well, by the way. So I'm invested in Waste Management and Nextera, so do keep that in mind. These are my favorite ones, and as always, I'll see you in my next video.